It was an unusually clear message from the Reserve Bank today, although they're always a bit too wordy for TV, so I've paraphrased it here. The economy is weaker than we thought, but let's have a squiz at the first quarter CPI before we cut rates again. The next inflation figure is due out on April the 24th, and it's very unlikely to be higher, so I think we can just about bank a rate cut next month. The thing is that retailers have very little pricing power at the moment, as shown by this survey of the expected quarterly change in prices. Not only are shopkeepers dealing with weak consumer demand, but they're being undercut on the internet at every turn. One thing that people are spending up big on at the moment is overseas holidays, but that doesn't help the local economy, that's for sure. Just look at this chart of arrivals and departures. The number of outbound trips for holidays has tripled in 8 years. And this is money that's not being spent in Australian shops. To reinforce the message, Metcash, the IGA grocery chain supplier, said it's cutting 478 jobs because of difficult trading conditions and continuing price deflation. The company's prices, they said, had fallen by an average of 0.9% over the past 12 months, and the price of its shares got hit hard today as well. The All Ordinaries was up slightly, with Telstra and Tabcorp two of the biggest gains. The Australian dollar is hovering at around 104 US cents at the moment, more or less steady on where it was at this time yesterday, although it did drop about half a cent at 2:30 when the interest rate decision came out, although I can't imagine why anyone would have been betting on a rate hike. Global markets were generally stronger today, apart from Japan, and commodities had a pretty big session in New York last night. Oil, silver, gold and copper all went up, with the crude oil price now at $105 a barrel and gold at $16.80 an ounce. And that's finance.